Hey guys, welcome back to Fish and Coin. This time we're broadcasting from the recap tank. This is where I break down my recent trades, explain exactly why I took them, and most importantly, what lessons I can take away from them. In my latest Bitcoin update video, I told you I'd be watching for short opportunities inside this higher timeframe resistance zone, and that's exactly what happened. Right now this trade is sitting in profit, and in today's video I'm going to walk you through the entire setup. So if you're interested in learning how I use higher timeframe levels together with lower timeframe rotations to build high probability trade setups, let's dive straight into the charts. This is the higher timeframe resistance area I was talking about in my latest Bitcoin update. The reason I was particularly interested in looking for a short position inside this zone is because when we zoom out, we can see that this area was responsible for breaking below this key price point right here, which marked the beginning of the move that eventually led to this local high. Because of that, this resistance zone becomes a very logical area for Bitcoin to create a new lower high and continue the current downtrend. And whenever I can identify a higher timeframe area where the odds are already leaning in my favor, that's where I want to start looking for trade opportunities. Now let's zoom into the 15-minute chart and see how the setup developed. Over here we can see the push that brought price into the resistance zone. As a trigger for my setup, I'm waiting for the loss of this price point right here because that would indicate that momentum is shifting and that a local trend reversal may be underway. A little later, price breaks below that level, creating the loss I'm looking for. That gives me the confirmation I need to start planning my entry. For my entry, I'm looking for untested price points within the move that caused the break. This area immediately caught my attention. Not only is it an untouched price point, but it also lines up nicely with the liquidity sitting above these highs on the left side of the chart. As for the stop loss, that's straightforward. I always place my stop above the local high when taking a short position, or below the local low when taking a long position. The reason is simple. Price can still push close to the high to complete a lower high before continuing lower. So I want to give the trade enough room to work while still keeping my risk clearly defined. My take profit levels are never placed randomly. Instead, I use historical price action to identify logical areas where the market may react. My first take profit is placed at this low right here. The second sits at the bottom of this price block. The third is positioned at the top of this range. And my final take profit is located down here at the local low. At each take profit level, I close 25% of the position. This is a key part of my risk management. Yes, scaling out means I may leave some profits on the table if the trade reaches the final target, but it also allows me to consistently lock in profits along the way and reduce the impact of a sudden reversal before price reaches my final take profit level. And that's the trade. Let me know in the comments if you've been watching Bitcoin for similar short opportunities or if you're seeing something completely different. If you found this breakdown helpful, leave a like and consider subscribing to follow my journey to becoming a profitable Bitcoin trader.